on paper than the United States, if your policy is not up to scratch, actually, you could make matters even worse. And I think this is the weakness, the Achilles heel of the euro at this moment.
And where would support be for the euro right now? We're at 136.53 on the dollar. Where would you see the next support level?
You know, given the weakness that we've seen on the euro crosses, in a way, support is not.
It's hard to see. There is no clear support.
I would say, you know, you're looking at big levels such as 133, 132, and so forth. Because what we have seen in the euro is when it slides, it really does slide. I mean, last week we had a 4% loss in the euro, which I think is its biggest weekly loss in history since the inception in 1999. So in that regard, you know, we are in uncharted waters. One would have thought after such substantial moves, you get a stabilization in the currency, if positions are cleared out and everybody's too short. But again, people are chasing expectations. The one thing to be said, obviously, is the risk of policy surprise. We have, obviously, the World Bank, IMF, and G7 meetings coming up. We have 11 central bank meetings this week. And I think, yes, there'll be a tendency for central banks to surprise the markets and cut by more or ease by more and to facilitate or to offset the pressure. But again, it all has a sense of being too little too late at this stage. Speaking
of central bank meetings, FOMC doesn't meet till the end of the month, but given the payroll numbers that we got on Friday, much worse than expected, could we see an inter-meeting rate cut?
That could be a risk that we do see. I mean, our house view is obviously that we get a cut by the end of the month, but I think, again, given how everything is so open, the other issue as well is that, you know, with the banking situation, there's an issue of capital and capital injection. So yes, the TARP plan does help in terms of shoring up stability, but we still have an issue of underlying capital. One line of positive reasoning, I would say, is that we do have the bank sector off the lows of July 15th. So the banking sector has done okay, despite all the gloom that has materialized. But really the concern is in the real underlying economy that has almost day by day now started to come up as an underlying issue, and that may force the hand of the Fed to act more prematurely.
And as we see that becoming a bigger and bigger fear in the markets, that would also undermine the case for some of the Asian currencies as well?
Yes, certainly. We're seeing weakness in the Asian currencies quite clearly this morning. Sing dollar, Korean won, wherever you look. Key level on our Asian currency index, ADXY, is broken below 108. So I think for the next month or two, we will get more weakness in Asian currencies.
Okay. Claudio, thank you so much for joining us this Monday morning.
Thank you.
Always difficult on Monday to...
There's a lot going on.
With all the weekends, exactly. Thank you again.
Pleasure.
Claudio Piron, their head of Forex Research Asia at JP Morgan, joining us here. All right, coming up next, China's once booming property market may be in for a bit of a cooling period now. We'll talk about that and what to expect when we come back.